Hello, I'm Donald Leggett and welcome to this edition of Share Views brought by the financial website London South East. Our guest today is Colin Hutchinson, Chief Executive of Ascent Resources, and he's here to update us on the strategic review of the business. So Colin, what's that all about then?
Yeah, thanks Donald. The strategic review, it basically means that we're looking at what options we have to take the company forward. People who know Ascent will know that we've, over the last 18 months, or 12 to 18 months, we've got our first 2 wells into production. We're producing gas, we're making a bit of a profit, generating some cash, and we sort of got through the first stage of the project. It's now opened up the decision of how we take it forward, how we grow. We've got a lot of gas in the ground, and the strategic review is about finding the right sort of financing structure and partnering structure to take the asset to the next level.
So what are the 3 elements of the strategic review?
There's 3 elements. Well, there's a range of potential outcomes. It could be something that we do something at the asset level. We could do some sort of farming or...
And what exactly is a farming?
So currently we have 75% of the asset. So in a farming, we'd give a percentage of that up to another party who comes in and they provide cash to fund the next stage of the development. It could be a sale of the asset itself to another party, or it could be a corporate transaction. So there's a range of potential outcomes. It could be a strategic adventure.
What exactly is a corporate transaction? What does that mean?
It would be Ascent combining with another entity, so whether it gets taken over by a larger company or merging with one of the similar size. Really with the strategic review, everything's on the table. We can see what the best...
Nothing ruled in and nothing ruled out.
Exactly.
You've been to management school, Colin.
It's really to see what the best way forward is for shareholders to grow the company and to really take advantage of the big asset that we have at Petosovci.
Why was the strategic review necessary?
The reason, the timing of it, in part driven by where we've taken the asset. So we started producing in November, and ever since we started producing, we've had approaches from various companies asking if we need a partner for the next phase. At the same time, the share price has disappointed really since we started producing. And
it fundamentally has disappointed. Given that you've got proven reserves in the ground, you're producing, you're cash positive. What's not to love? Yeah,
exactly. So it really has disconnected with where we see the sort of operational progress of the company. So a combination of those 2 things made the directors think that we should, in order to avoid the risk of a sort of an opportunistic bid that takes the company out at a price that undervalues it, and to sort of open up the process to see, as well as these companies that have approached us, if we do sort of put our hand up and say we're interested in finding a partner, to see exactly who's interested. And we've had quite a good response since we made the announcement last week. So we're in the process now of sharing data, sharing confidentiality agreements with these people, sharing data with these people. We'll see how the thing develops.
In your heart of hearts, are you quite comfortable with where you've got to? Do you think this is the best of a bad job?
I'm very happy with where we've got the company and where we've got the project. I mean, I took over, or I joined the company in 2013. The asset wasn't really going anywhere. We got a series of other assets in Europe which were more liabilities than assets, really. I joined the same time. Clive Carver joined slightly before me, and what we did was we got rid of the liabilities in Italy and in other parts of the world, and we focused on Slovenia. We got Slovenia into production.
You went for the golden egg.
Generating cash. Well, it was by far the asset with high potential. It's got 456 of the P50 resources in the ground. It's a big asset, and we've got that asset into production now. So we've sort of achieved what we set out to do. So I'm very happy with where we've got the asset to, and I think the strategic review should be very positive for everyone. It should be positive for the project. We'll find a way to bring it, accelerate the growth, hopefully, and it should be positive for shareholders.
So tell us what the gas reserves actually are and what you think they ought to be valued at, and what the whole operation as a whole you think ought to be valued at. In other words, what are you going into the marketplace and what are you asking for?
Well, I'll answer that as best I can. We've had, back in 2013, there was a resources report done by a third party, RPS, and they put their sort of P50, their average case of the gas in the ground was 456 BCF. We break that back in our accounts and annual report into the what's recoverable, which is about 50%, and what's attributable to loss, which is about 75%, which is exactly 75%. So we've got, I think it's 88 BCF in reserves, which is from the sands that have already been produced commercially, and another 76 BCF in resources, which is the other sands in the field where there hasn't been commercial production in the past. And those, in total, I would put the total discounted cash flow valuation in those at about 200 million sterling. It's about 1.2 million per BCF.
Roughly 200 million sterling, interesting.
That's my calculation for what the field would be if you produced it all and put all that cash in the bank. Now, what that translates to into a valuation today is very subjective, but our market cap, I think, today is around £30 million. So there's a big discrepancy there.
So, a time frame for all that?
Time frame, there isn't a set sort of rigid time scale. As I mentioned, at the moment we're in the process of sort of getting confidentiality agreements signed, getting people into a data room, sharing information, and that process will go on for several weeks before it starts to develop into anything else. So I'd imagine that this process will last for months, but we will keep up shareholders updated.
Months, if not longer, Colin.
Well, not longer than months, but it'll go on for some time. It's not going to be something that is that completes in the next week or so. Let me say that.
Okay. I didn't realise Geonergo owned 25% of you. Is that a significant stake?
Well, they have 25% of the project, so separate to us. So Ascent has 75%, and Geonergo have 25%, and that 25 is owned. Half's owned by Petrol, who are a large Slovenian corporate, one of the biggest companies in the country, own all the petrol stations, a big downstream business, and Nafta Lendava, who are the old oil and gas, state oil and gas company, government owned. This process doesn't impact them.
Do private investors need to worry about them?
No, they're all fine. They've been briefed on what this process means for Ascent and for them, and they're supportive.
So basically, they will vote with the 75% vote?
They won't. They're not shareholders in Ascent, so they don't have an impact in the proceedings.
But in terms of the running of the project, they're happy to go with the flow?
Yes, we run the project together. There's an operating committee which is comprised of Ascent and Geonergo, and we take joint decisions on how we move the project forward.
Got it.
And the relations between the partners really have never been better. They have been strained in the past, but now I think that they're very good, and we work together as a very good team.
At an organisational level, you have 2 wells up and running currently, and unfortunately have problems with PG11. So it's been a few days since we've heard back from you on PG11. Has it settled down yet? So
PG11 has just underperformed a bit since we brought it into production. There was some tooling that was left in the well during the workover process. It was thought at the time that wouldn't impact the performance. But given that we hadn't been sort of hitting the heights that we had during the tests that were run back whenever the well was originally completed, we decided to go back in March and remove that tooling. The well's still cleaning up. We're still trying other things to try and... It's essentially having difficulty lifting water. So we're trying other things, and we'll update the market in due course once we have some tangible results.
Okay. So that's the detail. I don't know, a strategic overview, what's happening in Petosovci going forwards, and how will all that add value as you try and sell the business, or do all the other strategic options?
Well, I mean, we're really just started the first stage of the project, so we've got the first 2 wells up and running. My field development plan has us with about 15 wells in 5 or 6 years' time.
7 re-drills of original wells and 6 new ones, is that right?
Yeah, so we'd start to go into the old wells. So PG7 and 9 would be the next 2 that I go into. Then I go into PG6 and PG8, and we'd add up. So we'd go into 7 of the old wells and 6 of the 6 brand new wells after that. So that's a long-term development plan to get us from the 2.5 million cubic feet a day we've been selling at the moment up to 35 million cubic feet a day. So that's the big picture. That's the long-term plan. To get there, ideally we need our own processing plant to make it much more economic. Permit, which you'll probably ask me on in a minute.
You're good at this.
Has been applied for. I'm hoping that's going to come through. So we'd start to sell some gas into the Slovenian grid. We'll
at what point do you actually need that processing plant?
It would be, I think it would be important. It's important to get the permit just to prove that we can get through this process. It's been a long time coming. I think everyone's sick to death of the process by now.
It has been 4 years.
I mentioned that to them this week. The plant itself, we'll sell gas to the Croatians for the next next year at least from the 2 wells that we have. I'd like to add more wells before we built the processing plant. It's really a question of capital, but it would be nice, I think, to get more production before we went through the process of building that plant. The plant itself, I'd expect we'd raise debt to finance that, whether it's vendor finance or some other type of debt. I think there's a range of ways you can fund that. 10 million euros, you know this already.
I know this back to front, Colin.
So,
what about the licence, though? What on earth is holding up the licence now?
The permit for the processing plant.
The environmental permit for the IPPC.
Where we've got to with that is we've submitted this, the court case back in November verified that the Environment Agency had followed the right process and everything had been done correctly. All that remained was a baseline study had to be done. We've done that study. That was submitted to them at the beginning of April. It's about 200 pages. They are reading at the minute. We had communications with them.
Perhaps they're slow readers, Colin.
Well, they do. They have to go through things in detail and follow their regulations, and they do things properly. We are putting as much pressure on as we can, but they don't respond that well to pressure.
So what are the next major milestones we can look forward to in the next 24 months, Colin?
So operationally in Slovenia, we'd like to increase production from 10 and 11, get PG11A firing on all cylinders. We'd like to get some permits out of the Environment Agency as well. The permit for the processing plant is very important to get that one through. The permits for PG10 and PG11A, we'd like to re-enter those and recomplete those when the time comes. It's some way off at the moment, but we'd like to have those in our pocket so we know we can do it when we need to. And we'd like to start getting permission for the new re-entries on PG7 and PG9. So getting some permits in. The focus this year will be permits, really. We might try and do some test perforations on PG6 and 9 later on in the year. But the focus really for this year is getting permits and increasing production. And then next year, once we have the permits, would be to start to re-enter, if necessary, PG10 and PG11A, and definitely PG7 and 9. So that's the on the ground is increasing production.
That's the operational side of things.
At a corporate level, it's very much depends on how the strategic review pans out. There could be a number of potential outcomes, but we'll see.
And you said that we've got a timeline of months potentially.
Yes, it's not something that lasts weeks, so it will last some time. But we'll keep shareholders as updated as possible during that process. We look forward to you coming back and having a chat with us, Colin. Perfect. Okay, thanks very much indeed for your time. Thanks, Donald. Thank you. And if you enjoyed that interview, why don't you subscribe to our YouTube channel where you can see plenty more. Thank you very much indeed.